Welcome to our podcast. Today, we're diving deep into how cryptocurrency is taxed in Canada. It's like, this whole structure that really defines crypto as property rather than actual currency.
Absolutely. It's fascinating. And it really breaks down when you think about all the taxable events involved, right?
Yeah, exactly. The guide explains that any profit you get from crypto transactions, whether you're selling, exchanging, or even using crypto to buy goods or services, is taxable either as capital gains
Yeah.
or business income.
And let's not forget, if you're mining or staking crypto, that income counts as taxable income as well. That makes it a lot more complex than just a simple investment.
Right? And the distinction is really crucial. For example, if your trading activity is more like a business, 100% of your gains are taxable. But if you're basically just holding and selling crypto as an investment, only 50% of your gains are flagged for taxes.
Right. Exactly. That's the crux of it. I've heard people compare it to how you might pay tax only on half of a capital profit, which can be almost like a discount on your tax bill if you're an individual investor.
Yeah. And what's particularly interesting is the nuanced step by step breakdown. For instance, when you're selling crypto for fiat money, you're taxed based on the gain or loss relative to its fair market value at the time of the sale.
That makes sense because if you're just holding and then decide to purchase something with your crypto, even that's considered a taxable event. And honestly, that can catch people off guard.
Absolutely. It's sort of like bartering. It's still an exchange of value, even though you're not hand over hand with physical money, right?
Yeah, true. And then we come to the methods for calculating gains. The guide details the cost basis method, adjusted cost basis in particular. This takes into account any fees and helps determine how much profit is taxable.
Right? It's like using the average cost basis method, which is super important if you hold multiple crypto assets. The idea is to determine whether you're allowed to claim a capital loss, especially if you rebuy similar assets within 30 days.
And that's where the superficial loss rule kicks in, right? It basically stops you from claiming losses if you're repurchasing quickly. That really keeps you on your toes as an investor.
Exactly, it's designed to prevent any gaming of the tax system. And the guide also highlights exemptions. Like if you're just transferring crypto between your own wallets, there's no sale involved, so no tax event.
Right. That's a big relief for those who manage multiple wallets. It ensures that you're not taxed on just moving your own crypto around.
And then there's the concept of receiving crypto as a gift. If you get crypto without having bought it, then the cost basis is zero. That means if you sell it later, you'll end up with the full sale price being taxed as a capital gain.
Yeah, that's a risk, isn't it? I mean, it almost seems unfair because you're taxed on something you didn't pay for originally.
True, and this is why proper documentation is so crucial. Keeping detailed records of the FMV at the time of receipt, whether it's an airdrop or a gift, is essential to avoid any nasty surprises with the CRA later on.
Speaking of the CRA, their approach is pretty strict. I mean, penalties for tax evasion in crypto are severe. A penalty of up to 200% of the taxes owed, plus interest and even jail time in worst case scenarios.
Right. And the conviction rate is around 90%, which really emphasizes the risk of noncompliance. It's like you're walking a tightrope with these regulations.
Yeah, and that's a major point for Canadian crypto traders. Staying transparent is not just a suggestion, it's a necessity.
Exactly. And there's something interesting about how federal and provincial taxes interact here. The federal tax rates apply uniformly across Canada, but the provincial rates can vary. For example, in Alberta, if you have a $10,000 crypto capital gain, you only pay taxes on half of that gain, which then gets taxed with both federal and provincial rates.
Right, right. So in that example, you'd have a taxable amount of $5,000. Multiply that by, say, 15% federal and 10% provincial, and you get a total tax bill that, in this case, would be around $250.
Exactly. It's a pretty neat example that really shows how the math works on crypto transactions.
And what about professional traders? The rules are even tighter for them, aren't they?
Yes. For professional traders or anyone running a crypto business, 100% of the profits are considered business income, meaning no capital gains discount. It's essentially a much harsher tax regime.
Right. That must push a lot of active traders to carefully consider if they want to be classified as a business or just an investor. There's a real fine line there.
Absolutely. And it's not always clear cut. The CRA looks at the frequency and volume of your trades to decide which category you fall under. I mean, one day you might treat it as capital gains, and the next day it might be seen as business income.
That kind of shift can be really disruptive, especially if you suddenly face a higher tax bill because you're now under the business income umbrella.
True. And here's where some folks might respectfully challenge the logic. Shouldn't there be a more streamlined approach? I mean, having the same assets classified under different tax rules depending on activity may seem inconsistent.
I agree. It does feel a bit arbitrary at times. Maybe a standardized guideline based on transaction volume would help reduce the confusion.
Yeah, it's a fair critique. Then again, the CRA seems to be aiming for fairness by treating crypto similarly to other types of property transactions. The intent is to bring it closer to mainstream taxation practices.
Right. And let's not forget the section on offsetting losses. If you incur a capital loss, you can deduct it from your gains, though only 50% of that can be applied in a given year. That loss can carry forward to future fiscal years, right?
Yeah, that's an important strategy. Especially in a volatile market where crypto values can swing dramatically, being able to offset those losses can really reduce your overall tax liability.
Yeah. And what about handling lost or stolen crypto? The guide mentions that with adequate proof, you can claim it as a capital loss. That must be a bit of a gray area, though.
Definitely. There's no specific CRA guidance on it, but it's treated similarly to other assets. You just need substantial proof, like receipts and wallet addresses. But if you recover any of that crypto later, you might have to adjust your claim.
Interesting. I actually think that the proactive approach taken by Canada helps keep things in line, even if it may seem a bit complicated.
Absolutely. Even with these complexities, the guide clearly sets out that transparency is key. Cryptocurrency exchanges, for instance, have to report transactions over a certain threshold, and even smaller ones have customer info on file.
Right. That level of tracking makes it really hard for anyone to try and game the system. It's definitely a step towards ensuring compliance.
For sure. And it highlights how serious the CRA is, especially considering the penalties. We're talking about potential jail time, hefty fines, and even travel restrictions for tax evasion.
Yeah, that's a stark reminder to everyone. Stick to the rules. In the fast evolving world of crypto, a little misstep in following these guidelines can cost you dearly.
Exactly. To wrap it up, it's clear that Canada's crypto tax landscape is built to evolve with the technology, but it does require you to stay informed and maintain detailed records to avoid any surprises.
And, well, it really serves as an excellent guide for both casual investors and professional traders alike. Keeping track of your transactions, understanding what constitutes a taxable event, and knowing how to calculate your gains or losses can make all the difference.
Absolutely. It's like having a roadmap in a very tricky territory. You really need to navigate it carefully with all the nuances of federal versus provincial rules and all the details on taxable events.
Well said. This conversation really clarifies the multifaceted nature of cryptocurrency taxation in Canada. I think it's crucial for anyone involved in crypto to heed these guidelines closely.
Definitely. And while it might seem bureaucratic at times, knowing these rules can ultimately save a lot of headaches and cash down the road. Thanks for breaking it down with me today.
Absolutely. Thanks for the insights. Until next time, keep those crypto transactions compliant and informed.